Hey YouTube, what's going on? It's Patrick here at VectorVest with a brand new video for you guys. Today we're going to be taking a look at the FAANG stocks, each individually, how they compare with one another, and take a look for which one is the best opportunity right now. I think the results will surprise you, so make sure to stick around. And before we get started, hit that like button, subscribe if you're not already subscribed to our YouTube channel, turn on the notifications for all the updates that we have for you every single day with new content, and let's get into it. All right. Welcome back, everybody. And right now, above me, you can see all the stocks, the FAANG stocks. So Facebook, Alphabet or Google, Amazon, Netflix, and Apple, all right here. Now, recently, the headlines have all been focusing on Amazon with that big run that we've seen recently. But I had to ask myself, is that really the best stock out of all the FAANG stocks out there? And which one is the best one if it isn't Amazon? Which one is the best one to get into? So I wanted to put these together to give you guys some insight on the power of rank analysis utilizing the VectorVest tools here. So as we can see, Facebook actually comes to the very top of the list because when you put in a listing of stocks inside the VectorVest software, it'll automatically bring the best to the top and the worst to the bottom. So let's get into it. We'll start off, work our way left to right, going over some of the basic information, and then we'll dive into each stock individually and how that helps you as a retail investor out there. So starting with Facebook, get the basic information so far: the company's name, the symbol, the exchange, the price, dollar change, percent price change, bid and ask, and then we come to the value. Now the value is where you really start to see the power of VectorVest that you're not going to be able to find anywhere else. The value is what we currently feel the stock is worth at this time. It's not a projected value saying 6 months or 12 months down the road. It's simply stating as of right now, based off all the current fundamental data out there, this is what the stock should be currently worth. The way we use the value is we compare the price of the stock to its value. So if the price is above its value, we would consider that to be overvalued. If the price is below its value, we consider that to be undervalued. Our mantra here at VectorVest is to buy safe, undervalued stocks that are rising in price in a rising market. So looking at Facebook, getting back into it, Facebook's current value is $457.80. Well, it's trading at $353.98 roughly right now. So therefore, Facebook is undervalued. If we take a look at the other stocks, Alphabet, overvalued. 2610 greater than 2489, so overvalued. Same with Apple right now, trading at 144 when its value is at 133. Amazon trading at 3,700 when its value is at 2,000. Netflix trading at 535 when its value is at 383. So in terms of getting the most bang for your buck, Facebook is the only one out of all the FAANG stocks that you're actually getting a decent value on. Now, just because a stock's overvalued doesn't mean it's a bad thing. You can still make money in stocks that are overvalued. But right now it tells you that if you're buying into Amazon, especially after the news last week, you're paying a premium on the expectations of what it can do in the future and not based off of the current valuation right now. After the value, the next 4 indicators are all going to be cast on scales of 0 to 2. And above 1 is good, below 1 is bad. This makes it easier for retail investors to get useful information and not just scads of data that they have to analyze on their own. So the RV or relative value is looking at the long-term potential of the stock over the next 1 to 3 years. We look through here, Facebook has an RV of 1.61, Alphabet or Google 1.47, Apple 1.45, 1.46, 1.47 for Netflix. So out of all of them, Facebook actually has the best long-term potential over the next 1 to 3 years. We look at RS. Once again, Facebook comes in with 1.50, Google coming in 1.44, Apple 1.32, 1.21 for Amazon, and then 1.23 for Netflix. So once again, Facebook coming in with the best fundamental aspect of a stock out of all of them, out of all the FAANG stocks here. The RS is basically an indicator of risk though. So above 1, once again, less risk, below 1, more risk. So from a fundamental standpoint, Facebook definitely has the better potential. Then we get to the RT or relative timing. Now the relative timing is looking at the short-term price trend of the stock. It's cast on a scale of 0 to 2 as we mentioned before. And above 1 shows the short-term trend is up. Below 1, the short-term trend is down. So as we can see, Alphabet or Google and also Apple have better RTs currently at 1.18 and 1.17. But even with Amazon's big run-up that the news made so much hype over last week, still has an RT of 1.12. So still not even as strong as Google or Apple. We look at Facebook, 1.15. So it's the third best in the group, but it also has the better fundamentals compared to the other basket. So therefore, overall, the VST rating, which is a combination of RV, RS, and RT combined into one to give you a good analysis of the stock on both a fundamental and a technical basis. Facebook comes in with the number one at 1.41, Google coming in at 1.35, Apple coming in 1.31, Amazon coming in 1.26, Netflix coming in at 1.22. So based off the current analysis of the stocks, Facebook clearly is the better winner, but you don't hear everybody talking about it on TV yet. So it's flying under the radar, has better long-term potential, has more consistency in their fundamentals, still third and the strongest uptrend out of all the FAANG stocks currently, and has the highest VST rating. Therefore, it makes it an easy decision for you to be able to analyze which stock is best depending on what you're looking for. In this case, Facebook pretty much takes the cake. Now, we are going into earnings season. Kicks off, I believe, in 2 days from now. So let's go ahead and go into the event viewer over here on the left and just take a quick look at the earnings coming up. And as we can see, on July 20th, so about a week from tomorrow, we have Netflix reporting earnings. On the 27th, we have Apple and Google both reporting earnings. And then on the 28th, we have Facebook reporting earnings. So therefore, if you're focused on Facebook, since it was the best performer out of all the FAANG stocks currently, July 28th is a day you want to mark your calendars for. All right, so now that we got all the information, all the fundamental analysis, all the earnings dates coming up out of the way, let's go ahead into the charts and take a look at these stocks from a technical standpoint and see which one shows the best potential right now. So we'll go back up to the stock viewer, and then we'll come over to the graph all button in the upper right and click on it. Go ahead and maximize it. All right, so here's my basic layout. This isn't the standard layout that we have here at VectorVest, but that's the great thing about it, is you can customize it to fit exactly what you are looking for and not what somebody else is looking for. So what I like is what you see here. Somebody else may like something different, and that's okay. You can add it on your charts there as well. And to give anybody who's brand new into the market a little insight on what we're looking at, we can see the price of the stock shown in candlesticks. We have a 3 and 8 exponential moving average of price to show short-term momentum swings higher and lower. And then below there, we have a technical indicator DPO, or the detrended price oscillator, which shows momentum. And then below that, we have stochastic oscillator, which is great for showing overbought and oversold scenarios. And then volume. And then last but not least at the bottom, EPS, or earnings per share, for that fundamental indicator. Earnings per share with VectorVest though is going to be a little bit different than what most people are used to, because our earnings per share number is not just looking at the historical data, but it's also looking at a 12-month forecasted earnings per share as well. So when looking at the earnings per share and you see a nice steady rise from bottom left to upper right like a stair-step pattern, that shows that the company is not only making money, but they're expected to continue to make money 12 months down the road. And as the old saying goes, money goes where money grows. So now we've got the charts here. Let's go ahead, zoom in to a 3-month look back. So clicking on the 3M in the bottom right, and take a look from a technical standpoint. Starting off with the very best, Facebook. Facebook has had a great run from bottom left to upper right over the last 3 months, exactly what you want to see in price action. We can see it pulled back a little bit off of that high at 358, only about a $6 difference, so not too far off from that high currently. But looking at the 3 and the 8, the 3 never really broke below the 8, so therefore short-term momentum is staying to the upside, which is definitely a strong sign. And then looking at DPO, which once again is a momentum indicator, you can see DPO is staying relatively flat, and that's okay, because when you see it staying flat, that shows momentum is staying about the same. Now, if you saw big spikes or big drops in price, then you would expect to see some more fluctuation with the DPO. But right now, things are just holding steady currently. And then we look at the stochastics. Stochastics has been pulling back a little bit, but as we always know, as long as it's staying, that 70 to 80 range or above, that's an okay thing. And we know that it can stay in those overbought and oversold scenarios for quite some time. So this is more of just a cautionary sign that we like to keep an eye on. Nothing really too alarming from what we see with that. And as we mentioned, earnings per share has been rocketing, steadily moving higher over the last year. So of course, Facebook looks pretty good so far. Let's take a look at the other competition. If we move to Google, Google has been on a nice steady run from bottom left to upper right in price action, exactly what you want to see, steadily moving higher. But there is one thing that's definitely drawing some alarm here when looking at the DPO. I'm going to use the freehand lines to add some lines on there to make it easier for you guys to be able to see and follow along. But if we connect these price highs here, we can see obviously price has been moving higher, no surprise. Well, let's look at the DPO. DPO has been steadily dropping. So since DPO is a momentum indicator, when you see price moving higher but the momentum indicator moving lower, that shows that momentum is waning and that there's less and less pressure to the upside and more risk to the downside. Now, bearish divergences are something you don't want to be caught on the wrong side of. And not always do they come true, but I'd say on average, I don't have any exact statistics to back this up, but in my personal experience, roughly about 75% of the time you see a divergence, that comes true. So it's something you don't want to ignore and something you definitely need to be aware of if you're holding that stock that you notice the bearish divergence appearing in. But looking at stochastics is staying overbought, so nothing wrong with that. And earnings, no surprise there, steadily rising. So Google looks good right now, but definitely sees some potential headwind coming up very soon that you need to be cautious with. If we go down to the next one, Apple. So Apple was moving sideways for about 2 out of the last 3 months. It really wasn't until about the last month or so that we've seen Apple really starting to take off and moving higher here. Now, it did just hit a fresh new high here today, pulling back off of it, which is not a strong sign. But when you look at volume, which volume is conviction, volume is relatively soft as well. So you can't really read too much into that down day that we've had so far with Apple. Looking at the DPO though, DPO hitting a new high here compared to the high 3 months ago. So that new high here today is being confirmed by the momentum indicator, which is what you want to see. And of course it is in overbought territory, but as we know, it can stay in overbought territory. Going to the next one, Amazon. Amazon once again has been relatively flat over the last 3 months. It wasn't until about the last week or so that we've actually seen a breakout out of that sideways move. Now, breakouts are an extremely powerful pattern to follow and pattern to take advantage of. And once again, we'll use the drawing lines at the top. We'll use a horizontal line here this time. But we had a level of resistance of double top 1 and 2 touches right around 3,500 a share. And that breakout we had last week has really started to see some momentum building up and getting some confirmation by looking at our DPO and our stochastics. So I like seeing that play on a short-term basis. There definitely seems to be some more upside potential coming in for Amazon, especially if you're one that's been following the news between Virgin and Amazon and the billionaires being shot off into space. So could see some news coming out around that, could see some price action hyping that up a little bit and see that reflected in the stock price, but most likely that's only going to be temporary. It's not going to be something that's going to really propel the stock to new highs. It's going to be coming down to, is the company making money and are they making money consistently? And as we all know, Amazon definitely fits that bill. So looking at Amazon, Amazon looks great, especially with that breakout recently on the short-term basis, but still, it's in the middle of the pack of all the FAANG stocks. And then last but not least, the one that really stands out as the worst performer is one that we need to be careful with is Netflix. Netflix is actually the only one that's moving lower over the last 3 months. DPO is barely treading above water or barely treading above zero. So not a whole lot of strength behind that. And then we did see a most recent run up with Netflix over the last couple of weeks, but nothing too substantial. We got a little bit of a push higher, still lower than 3 months ago, and now just moving sideways, seeing some consolidation at best here with Netflix. One other observation, this is on a 3-month chart, but we go zoom out 6 months. 6 months of stock is flat. All the other ones are moving higher. Netflix moving lower or just sideways. And while it's not really losing any money over the last 6 months, you are potentially losing money by loss of opportunity of investing your capital into something else that is actually going up rather than parking it here. So you could make the argument that if you're holding Netflix over the last 6 months, you are actually losing some opportunity money in this trade. But overall, earnings are steadily rising, so on a long-term hold, sometimes you have to sit through the sideways action. So let me know down in the comments which FAANG stock is your personal favorite. Did I miss something? Is there something that I'm not seeing or that I overlooked here? Let me know in the comments down below. And also, do you agree? Is Facebook the best performing or best looking FAANG stock right now? Or do you think Amazon with its billionaire ex-CEO shooting off into space is going to propel that stock higher and get it outperforming the other FAANG stocks? I'd love to hear your comments down below, so let me know in the chat what your thoughts are, and hopefully today's video helped you guys understand the FAANG stocks, find out which one is actually the best performer, even though it's not necessarily the most talked about right now, and help you guys make smarter and better investing decisions. So until next time, take care, adios, toodles.
Yeah.